Welcome, everyone. Marianne Feldheim. I'm your moderator for this session. Just a few housekeeping pieces that we've shared before. That we ask that for best reception that you keep your Zoom screen on the speaker view, and that you remain mute for this session to keep from distractions in the background. Please post all questions into the chat, and there will be time at the end when we will read those and address them. And should your signal degrade, we do ask that you turn off the video. This seems to help. So thank you, Sunko. We can take that down and move forward. So it is my great pleasure to introduce Mark Brewer, who is the president and CEO of the Central Florida Foundation. But on a better note, Mark has been one of our longest serving members on the UCF Nonprofit Advisory Board. He has been involved in multiple conferences and assisted in multiple ways. He also, through the Central Florida Foundation, has worked with Dr. Stephanie Crick on service learning. So in one of her classes that he and the board of the foundation allow students to help review grant applications and then make recommendations to the board as to which of those applications should be funded, which is a wonderful real world experience for those students on how it works from the funder side, which is something that we aren't able to offer all the time to our students. So that is a great piece that we're very thankful for. The Central Florida Foundation has become a leader in the area, certainly with their community talks. In the last year and a half, they have done marvelous work to bring the community together, to bring key people and to hear the voices of the community, and they are sharing that on a regular basis. Mark also is nationally known, has been around the country actually speaking on reframing resilience in nonprofits, and has become around the state a featured speaker. He has done research, an extensive reader. I know from past that he's up early reading every news article there is, so he can share all of that information. So he's a wealth of information, and I'm going to turn it over to Mark, and there will be time at the end for questions and comments, but please use the chat and take it away, Mark.
All right, thank you, Marianne, and good afternoon, everyone. It's great to see you all, those that I can see, and I'm going to share my screen so that you could see some things I'll share in the next little while. Let me start by saying that we are in the midst of a very unique time in American history. If you think about it for a minute, there have been very few times in most of our lifetimes where there's been this level of mass disruption. So from the pandemic, which is bad enough on its own from a public health standpoint and from the standpoint of the economy, to our reckoning with racial justice, to our understanding that many systems in the United States are misformed and need some repair, you have a lot of people doing a lot of thinking right now about how to change things. And the most unique part of this discussion is around the ability to innovate. Great innovators have to disrupt something before they can innovate. And in this particular point in time, when we have mass disruption, this is the perfect time to innovate. So while there is some probably bad news in what I'm going to share with you going forward, I don't want you to see this as a bad time. I want you to see this as perhaps one of the best times in American history for innovation and for being able to change things. And it certainly is a time in which the independent sector will play roles that it hasn't played in the past and should have, and play some roles that it has played in the past in a better way in the future. The independent sector's role here will become predominant in several areas, and I'll touch on those as we go through the material here. But just know that it hasn't been since the 1930s that we've seen this level of disruption in America. In the late 1930s, we were post a depression and post the First World War, and America had to begin to rethink what its leadership systems would look like, what its infrastructure would look like. Everything from highways to the structure of nonprofits were changed during that period of time. And I believe that this is going to be that time again. And so for all of you that are in the sector now, headed into the sector, or are academics around the sector, you're going to find this a really unique time to be alive in America. So I wish I had a crystal ball where I had all the answers and I could just show them to you, and then you could move on and do whatever you needed to do. I don't. In essence, what we're facing now is a little bit like this pandemic, in which there are a lot of things everyone should know, but there are many things no one knows for sure, or even the revenue stream to build something. That not only is not a good idea in a good economic time, but it'll kill you in a bad economic time. Capital is what we use to build infrastructure that will accommodate revenue generating programs. So the kind of donor who makes gifts to a nonprofit for programs is not the same kind of donor that makes gifts to a nonprofit to expand its infrastructure or to expand its management team or its, in some cases, actual capital buildings. And so understanding that those revenue streams have to be identified, tested, and then some kind of capital strategy needs to be looked for. Now is the time for capital strategy to strengthen revenue producing mission channels post-pandemic. So it's a change in the way we think about things and the way we look at things. Now look, there's some good news and some bad news on the giving map, and I want to share both of them with you today. What I'm going to share in this giving map continuum is some of the bad news, but I want you to know that projections are only good in the moment that they're given. These projections are recent within the last few weeks. But I will tell you that Indiana University just released within the last few days from their philanthropy unit a report that indicates that giving for 2020 may actually rebound and be up more than 4%. And we could see a rise in giving in 2021 above 5%. Now, their methodology is sound. What they're doing is looking at the differences in the way nonprofits respond to the pandemic. So what that means is some nonprofits are actually responders. So if you're a human services nonprofit, if you're a food bank, you're a responder to the pandemic, which means more money is going to flow to you in the pandemic than might have flowed to you in better times. But if you're an arts and culture organization, if you deal in education, if you deal in other human services not related to the pandemic, you're likely going to see a hit. The Indiana University study identifies that arts funding in general has decreased since March by 92%. In that fashion, that's put a lot of arts organizations out of business or hibernated them to the point where they'll have to wait until the economy turns around or giving comes back. But let's look at giving in a different way related to the pandemic. I want to start by showing you the general, I would call this the way we look at giving from a market perspective. And so a retail donor is somebody that doesn't have any relationship or equity connection with you at all. They're just donors. They've got some money, you ask, they give. This cohort is in disruption right now, and most of the models today show a 50% immediate reduction and a 5-year recovery for active retail donors. Now, what do I mean by active retail donors? First of all, they're mostly families. They're in various income streams. And for the most part, they are the people who literally in good times think about nonprofits more than anybody else. It shouldn't surprise you that people who have been in hard times, have had significant difficulties where they were helped by a human services nonprofit, when they're on their feet and can give, they'll give. And in reality, people who make less than $30,000 a year give as much as 7% of their income to charity, where people who make $100,000 a year or more give on average 2 or 3%. So retail donors are the people that have been immediately hurt. They've lost jobs, or you're in a situation where they're not sure about their job. And so we've seen this decline. The Indiana University report indicates that this could rebound faster, assuming unemployment continues to go down. But clearly, before the election, this is not going to be an easy thing to see change. The next part of the giving map is mid-level donors in cultivation. Now, cultivation means a donor that a nonprofit has a relationship with, and they've been working with them for some period of time. Some people are calling this the missing middle, and before the cohort, this was a declining area of philanthropy, primarily due to generational changes in cultivation. Look, if you're a younger person, you're not as cultivatable as you are if you're a baby boomer. Baby boomers identified, designed, and deployed cultivation in all forms of business. The concept that I would have a relationship with you, I would know you, you would do business with me because of that, we would then grow in our relationship over years, And if I'm a nonprofit and you're a donor, you would give more. You might eventually serve on the board. You might help with things that we're doing to raise money or volunteer in our programmatic area. And then eventually you might leave me a planned gift at the end of your life. That's the cultivation cycle that ran philanthropy for a long time. But most of the models now show this already declining model may have a 3-year recovery to it because these folks, for the most part, are out of the circle. They're not hearing from nonprofits, they don't interact with nonprofits, and may not really understand the sector or what it does. In the middle of the continuum is family donors that are building cross-generational experience, right? So in the case of higher net worth people in families, the patriarch and matriarch, followed by the first gen, second gen, and third gen, typically create family philanthropy strategies. This cohort is mostly driven by nonprofits that engage investors in long-term social change. In other words, you know them, they know you, you've spent time with them, you've volunteered your intellect as well as your money, and you're focusing on something long-term for which these organizations are working on. That would be a place that you might go. This is the one part of the sector that is not currently in decline. There's a lot of activity here, and there's been an increase in giving among those recovery nonprofits. So in other words, if you're doing work that specifically ties to the issues that face the pandemic, then this group is getting a lot of activity. High net worth individual investors are the ones that most people think about when they think about giving. They think of the big gifts, the major gifts. This is a growing cohort, but you have to be aware of the fact that the unintended consequences of focusing on this cohort can have problems. This cohort typically goes away every time the market drops because much of their giving comes from their invested assets. And right now the models are showing an 18-month recovery. This segment has recovered once already. You'll remember that in March, the stock market dropped clearly more than it has since 2008, and then has recovered, and with it has the giving of these folks. But the question now is, what kind of recovery economically is this? Is it a V? Is it a W? Is it a U? If you're not an economics major and that sounds confusing to you, we typically look at economic recoveries by how quickly things come back. So if there's a sudden decline, and then it gets fixed, and then it grows back to where it was, that's called a V recovery. In some recoveries, in fact, in most recessions, it's a U recovery, where you hit bottom, you bounce along on the bottom for a little while, and then you recover. This recovery could actually be a W recovery in that we've already hit bottom once and recovered, and now we could be looking at another decline in the stock market. Because of the way politics works with philanthropy and with the sector, understand a couple of things here. In an election year, in any general election year, Florida loses about $1 billion from the philanthropy pool that goes into gifts for political folks that are running for office. And the reason that happens is because more sophisticated donors who might, for instance, give to an education nonprofit to help fix an education problem they perceive in the marketplace would also be willing to invest money in a candidate running who has a policy solution to change the course of education. And so with that in mind, and with the fact that we don't know what the stock market's going to do, except we do know, I hate to sound like the lady in the video, we do know that the stock market will likely decline around the election, regardless of who gets elected. Typically, when Republicans are in office and Democrats get elected, the stock market goes down because of the differences in policy values between the two parties. In this particular case, whoever gets reelected, we could see a decline in the stock market based on the market's theory and thought about what the future looks like. All of that to say that this particular group is driven by all of those machinations. And because we don't know exactly what's going to happen, they are a difficult group to stay hold of. And then the last piece of the giving continuum is the long-term investors that have equity in you or in your social change. This is called the new cultivation for most people. This is the families and their generations that I talked about a minute ago. But what it means is they have to be engaged in what you're doing. This continuum moves from the tradition mission-funded competition, which is people throwing money at organizations that are doing good work without really understanding what they're doing, all the way to value-driven social outcomes, where people's values are actually tied to the things that are being worked on. And many of the folks that make these investments in nonprofits are long-term investors. They're not one gift people, not a single major gift. They're not an ongoing annual campaign giver. They may literally be people that make a series of major gifts or planned gifts to help that work. So the good news and the bad news here is that we're in for a patch of rocky road. Some of it is very rocky right now, especially when you look at other forms of philanthropy. If you think of corporate philanthropy, for instance, which has taken an almost 96% drop in Central Florida because many of the corporations that make the largest gifts don't currently have revenues. And they aren't foundations. They make gifts out of net revenues. So if they don't have revenues, then there's going to be no philanthropy until they get their businesses back on track. And for those that still have philanthropy initiatives, they're mostly aimed at their own employees who are going through a tough time now too. So having said all that, investors in social change aren't donors. And one of the things the pandemic is teaching many folks is that investors care more about what gets done than they do about the process. And good investors, the people you want to work with, have a head, a heart, and a wallet, right? They're not just people who are responding to an ask. They're not just giving out of a budget. They have a head, they understand strategy, and they want to see things change. They have a heart for the issues they care about, and they bring their wallet when they come to the table. There's some disappearing buzzwords you'll notice if you kind of follow the trade publications in the sector. Impact, capacity, sustainability, these are all words that are beginning to go away. And quite frankly, it's about time they did. For years, we've talked about the impact that people have when they get grants. Impact is mostly a historical measure. It's something that we're going to regressively look at to try to figure out over some period of time, have you had impact doing what you do? It's very difficult to have impact with a single gift or a single grant. Capacity for a long time was thought to be the core purpose of fuel for the nonprofit sector. But now we realize that doubling the size of a badly performing nonprofit just doubles the problem. So it's not so much about capacity, it's about capability now. And capability sometimes requires capacity to go with it, but we don't just give money to make things bigger or better or get more of it. We try to figure out what's the capability and how do we do it better. And then sustainability is going away, as it should, because sustainability in the sector has always been used as a way of trying to understand how something you were doing would go on forever. And now we realize it's not the program that has to be sustainable, it's the work of the nonprofit that has to be sustainable. So I might change programs 7 times in 7 years in order to get to the same outcome. And those programs are not sustainable and don't need to be. But my passion and my focus on that issue has to remain sustainable, and I have to be financially sustainable to be able to do it. So investors are focusing now a lot more on capability and outcomes and trying to figure out what those look like moving forward. Capital is also more important than revenue right now, and investors know it. So one of the things you'll find is that most foundations are not as pre-selective about the programs that they're funding. They're spending more money on ongoing operating costs. And you'll find that many donors are no longer wanting just to get their name on something. They're instead trying to make sure that nonprofits have the fuel, the capital to keep moving in a bad economy. I will tell you that that is a very competitive market right now. And the case for how long you've been in the marketplace and how much people trust you and how much they understand you is what really drives that, because of the lull in the market in terms of the availability of money right this minute. Now, investors invest in value and not mission, and that is something that we've seen coming for a while, but the pandemic has really driven that. The nonprofit sector has pretty much always focused on the faith sector in thinking about a mission being the highest calling, right? So all nonprofits have a mission, they're very focused on that mission. But investors recognize that your mission may not be something that they always care about. Your value, on the other hand, the outcomes you produce, is more important than what your mission is. So if you do all of your marketing and all of your communication around your mission, then you're missing the opportunity to think bigger than the mission. Think of it this way, everything that nonprofits work in are a continuum. There's something that happens to people or to things they touch before it gets to them. And when they're done working with people or the things they touch, it moves on someplace else. Being able to step up above the mission that you're in and think about what's the environment look like? What's the global view of what I'm doing? And are there some things I should or could be doing differently or better or not doing at all? And are there some things I should be partnering with other people for because they do it better than me? This brings us to something called the theory of change, which becomes the mainstream. We're going to talk about this in a minute. But a theory of change is basically this. In the old days, we did planning, strategic planning. Now, strategic planning hasn't gone away, and many people still have strategic plans and will continue to have them. But the concept that we would sit down and do a long-range plan, a 5, maybe a 7-year plan, and we would actually have the capability to be able to see that far ahead is pretty much gone. And if it wasn't gone before the pandemic, it's gone now. If you're a nonprofit that finished your new strategic plan for the next 5 years in December of 2019, I guarantee you it's been in the drawer ever since then. Because the one thing that never comes up in a planning discussion is, gosh, well, what would we do if there was a pandemic? So a theory of change is really the exercise of saying, if we do this, then this will happen. And when you know that if you do something, something happens, that theory of change becomes the most investable thing that you produce. It means that people stop giving money to nonprofits for a laundry list of things they want or processes that they do. Investors stop thinking about nonprofits as being thrifty or not thrifty, and instead what they're buying are outcomes. It's what we produce that people invest in, not the way we do it or the things we do. Now, I mentioned a minute ago that there is more bad news in the future. So I want you to get ready for a couple of things just to be aware of them. There's the potential now that 15% of the nonprofits in our region could go out of business beginning, it actually began in June, where we started to see an increase in mergers and acquisitions, but this technically will finish up probably by December. The average nonprofit has about 12 weeks of capital on hand, and that goes away quickly in a pandemic. So the ability for people to begin to think about how they hibernate, slow things down, how they place their money specifically on focus areas and pick them well. And then there's the potential that 17% of your donors' businesses are in jeopardy by the end of this year. That's particularly true in some segments of the business community. Clearly, if you're a bar or restaurant owner, or if you're a Black-owned business, recent projections for the Black business community is that 40% of Black-owned businesses could be out of business in the next 18 months. And so we're going to see another ripple in the economy that people aren't really thinking about right now, because there's a kind of a physics rule to this. The economy doesn't actually bottom out until the virus tops out. And because the virus hasn't topped out yet, you notice that Europe is now looking at a second wave, and we're now thinking that some of the United States is facing a second wave. Well, with that happening, the economy will continue to be rocky and can't start to recover fully until the virus peaks. And so we're in this kind of handcuff situation where we can't project what to do to solve the future problems until we know the current problem is over. Think of it, those of you who are from Florida, think of it as a hurricane for which the wind never stops blowing. In a hurricane, we all go inside, we draw the blinds, and we hunker in the bathroom until the wind stops blowing. And then we go outside and pick up all the garbage and trash that was blown around, and we get our lives back to normal. We can't really do that in a pandemic, nor can any of the businesses or nonprofits do it until the virus peaks and we know we've got that under control. Whether that's with a vaccine or it's with herd immunity, I'm not into the politics of all of that. It doesn't matter how it happens, it just has to happen before the economy finally bottoms out. So right now, the key rule of thumb is for nonprofits not to be spending their reserve on mission. Now, that might sound counterintuitive and even nasty to some of you. But the reality is, if you're providing programs and services to people and you now have only a small reserve and you begin to spend that reserve in order to continue those programs without investing it in your business, then your business is in jeopardy. And you as a nonprofit are more important than the programs you produce. So keeping nonprofits alive means they need to make certain that they keep capital in the stream to keep them alive and make certain that they're there as the pandemic goes away. So earned revenue is the most important thing for the future. I would almost say it's been the most important thing for a long time, but many nonprofits suffer from not having diverse revenue streams, and diverse revenue streams are the answer. So the problem with diverse revenue streams is when they're diverse in the same way. So if you have a single funder or two funders that are funding you, you might think, well, I'm diverse because I have two funders, but you're not, because the money comes from the same place. So the ability to have good individual donor activity, to have good corporate donor activity, to have good activity around the process of identifying new forms of revenue and capital that can come to you is all important. Whenever you can get paid for something you do, that makes you into a social enterprise. So the whole concepts of social enterprises have really taken the nonprofit sector in a new direction in the last 5 years. The concept that we could all give each other enough money to go do something important, or we could start something that earned a revenue stream that would support what we do, where we had measurable social outcomes that were equal to our measurable profit outcomes. In the for-profit sector, we call that profitability. In the nonprofit sector, we call it sustainability. And that's an important concept. So cash is king, which means everyone has to make their cuts quickly and cushion their reserve and make certain that everyone is around for the end of this pandemic, and to be different and see where we go next. So right now isn't the best time to be diversifying revenue streams because many of them are muted right now, but it's a good time to start thinking about what that looks like when you get there. So I want to take a couple of minutes on theory of change because I know you know it, and I know you've read about it, and some people think it's very complicated. It really isn't. It's really part of a continuum of change for the sector that began about 15 years ago, when people began to realize that when you do a plan that has incremental outcomes in it, you are now incrementally moving something in a direction. This is good. But the problem with that is, as you go to investors and you go to market to talk to people about what you're doing, you're asking them to invest in the elements, the pieces, if you will, of your plan. And that's not nearly as enthusiastic an ask as when you have a theory of change and you can present that theory of change by saying, when we do this, this happens. And we know that, thus we have a theory of change. So how does it work, and why do you need one? What's it look like? Here's the simplest exercise around theory of change. If we started with a list of desired outcomes, I would call them states in some cases, desired states. These are external things that a nonprofit impacts. And we make a list of the things that we desire to impact. And we make that list with some specificity, with some measures connected to it, even if they're aspirational. If we define, we want to get someplace and this is what it looks like. Now, the key to theory of change is you don't want to include you in the theory of change. I see many people do planning and do fundraising budgets in which most of their fundraising budget is how do they get money for them, as opposed to selling the outcomes that they're actually producing in the marketplace. So once we have this, we have some form of this, and this is great board discussion. It's a great way for boards to come together and think about what their nonprofits are doing. Then we go to the data, and you need data for this conversation. You cannot do this with anecdotal thoughts. Now we want to know what the current situation is. So we know where we want to get to externally. What's the current situation? Not what do we think it is? What are people telling us? What do we presume is the problem? But what's the actual problem? Now, look, this is complicated stuff. It's not difficult, but it's complicated because many in the sector are so data starved that they habitually make up ideas in order to proceed against goals and challenges that sound good on paper, but there's not a lot of evidence that they work. And it also moves the sector to be more crisis focused than it should be. So if you're in education, you know that we never look at education as a machine. We always look at it by pieces. We think about pre-K, we think about K through 12, we think about state colleges sometimes, universities sometimes, and we think about career source or workforce as something else. But we never think about them together in the continuum they actually are, because most of the crisis that's in the education system feeds itself. Third grade reading skill problems are almost predominantly birth through 5 brain development problems. So if we had fixed the problem there, we wouldn't be facing it in 3rd grade. And 3rd grade reading skills cause high school graduation problems. And then we have the difficulty of people graduating without skill sets that might allow them to move into a workforce. Instead, they look for more education to try to figure out what that looks like. Some not having an actual direction to go or being able to put 1 and 1 together to get 2 out of the process. If we fix that, and the pandemic is doing that, you may have noticed if you follow the media that many environments, including Orlando, where we have about 209,000 people out of work in the tourism industry right now, are beginning to rethink occupational job focus and rethink skill set job focus. What do I mean by that? So in the old days, you would do your resume with your occupation and all your education and all the things that you had done in that occupation to get a better job in the same occupation. Today, we know that most employers are better set if they can define the skills they need, and then they'll shop for people, not by what job they had last or how much money they made, but by what skill sets they bring. So if you think about that, if we were to do that, the 209,000 people that worked in tourism who currently don't have a job certainly have skills around customer service. They certainly have skills in all kinds of service areas where they would fit quite nicely because they've been trained to do that in tourism and hospitality. But we don't think that way. We think about keeping people in occupations. So in that theory of change, which is moving right now, the desired outcomes have defined the current situation. And then the third part of a theory of change is to figure out what the nonprofit's enabling factors or barriers are. So if I have a whole bunch of measured outcomes that I want to accomplish, and I've got the data to show me what the current situation is, then getting from 2 to 1, I have to first look at what are my enabling factors? Why am I doing this? Should I be doing this? In fact, in this pandemic, one of the things most nonprofits are doing is making a list of things they do and then putting many of those things into hibernation. In good times, nonprofits end up doing things that funders give them money for. They end up doing things they think are good. They end up doing things people ask them to do. But not all of them are defined by the value proposition or defined by the mission. And so putting things into hibernation now not only saves money, but it allows you to test whether or not some of the things you're doing really need to be done. A barrier in this case is not something that would keep you from trying to do this. It's something you have to get over or you have to just come to grips with. There are many things that nonprofits do for which they have to get around barriers. There isn't a human service nonprofit that doesn't have a stack of barriers that keeps them from moving people from unhealthy lives to healthy lives, from homeless to housing, from no job to job. There are many barriers in there. But if you don't inventory them and understand which ones you need to get around and which ones you can quash, then they will stand up to hurt you. And by the way, a barrier isn't having enough money or not being sure you can do it. A barrier is an actual thing that stands in your way. And your enabling factors are the things that make you right for the job. Now, in a minute, this will all become much clearer to you. If we know the desired outcomes, we've got the current situation data-driven in hand, and we've analyzed the data to know what we have to do to get from 2 to 1. We've factored in our enabling factors or the barriers that might stand in our way. Now we can do what almost everyone knows how to do and does regularly, and that is design a document that has processes and activities in it. And that's where most boards are comfortable. They say, well, what are we going to do by February? How much is it going to cost? And what's the measure to know that we got it done right? Now, when a theory of change is executed appropriately, we then want to look ahead at the long-term outcome. So if I get from 2 to 1, that means I'm going to now roll forward and look at 5 and try to figure out what's the future long-term outcome of continuing to do this, or what's next that has to be done with this outcome to drive it to where we want it to be. This theory of change piece can be a discussion tool. It can be a sit-down tool. You can do this for programs. You can do it for entire entities. You can do it for concepts. But at the end of the day, it validates whether or not if you do this, this will happen. And it defines exactly what that looks like and how it fits together. So some relevancy comes from this valid theory of change that you might not have before. If what you've done before is something that you came up with, but nobody understands it, and you don't have a theory of change to actually define it for them, it creates difficulty. So the first question is, do we have the capability to actually perform this? We've got a theory of change. We know if this is done, then this will happen. Do we have a value proposition? Can we attract new and existing revenue streams that lead to diversification? If you think about the relevance in changing the mission continuum, that's the arrow to your right here. At the depth of the nonprofit sector are a lot of nonprofits that used to raise awareness. And today, it's defined delivery of crucial services and outcome-driven programs that actually attract the money. So we want to know in our relevance, we know our donors, do they know us? We know the elected officials, do they know us? We know all the people we serve, do they know us? Are we doing things to people or are we doing things with people? And if you're thinking about budgets, you want to rethink marketing and development. Many times in a pandemic or in a bad state of the economy, nonprofits wipe out their marketing budget. Marketing and development go hand in hand. And what you'll see in the future is something that's been coming for about 5 years, and that is more defined marketing strategies for organizations where marketing feeds development, not development standing separately and doing work in the sector to try to get to investors without being acquainted or connected with the mission and other measures and messages that come from the organization. So we always want to rethink marketing and development, and we want to keep that strong, especially in bad times. So there are some post-pandemic options here to think about. The one thing you don't want to do is look for rescue funding because there wasn't much of it and most of it's gone. Nobody is interested in keeping things alive. They're interested in figuring out how to continue to solve problems. Strategic alliance and M&A activity is very heavy in the Central Florida region right now, with dozens of organizations thinking about it. Funders want to rescue resources, not organizations. So typically M&A comes when an organization is doing something important. Now, look, we don't want to lose that nonprofit. We don't want them to go away. But if when they go away, take beds or other resources with them that we need to serve people, then that's a much more expensive failure than just the nonprofit. So what you'll see is many funders are really interested in assisting with that continuum between strategic alliance and M&A. Now, we don't have time to go into this now, but I just want you to know that that continuum is made up of this. A strategic alliance is when you and another nonprofit get together. You don't change your brands. You don't give each other money. You don't align anything other than the work you're doing. And in that strategic alliance, you can sometimes adopt a position and a set of outcomes that will attract more money than you could have done individually. From strategic alliance, we normally move to a partnership or collaboration level. From partnership and collaboration, where we're still separate entities, we're still working together, we might be sharing funding. From that, we move to mergers and acquisition, with the merger being something we do when two are stronger than one to increase the geography or increase the service capability. And then, of course, acquisition is where you and I, as an entity, might be able to rescue some resources and expand a set of services done by another nonprofit that doesn't have the financial capability to continue. So you can look for funders to focus in some core areas over the next few months: food, healthcare, housing, services that are for those that are left behind in the focus of equity. These areas are where funders are putting most of the money they've got, and it's primarily because of the pandemic. But one of the things you'll see is that innovation is still at the top of mind for most private foundations. Most public foundations are in the same space. If you're funding spaces in which we need innovative strategy, then you need to be able to fund innovation, which means a time for new ideas and a time to test things against theories of change. So now's the time to meet up with people who share missions and share non-mission partners as well. It's a time to figure out, are there other people in the community with funds, if you don't have them, that can work with you to get there? And volunteer leaders need to step up and lead here more than ever, right? Volunteer leaders are sometimes very capable people that are too silent in communities. They don't speak up. They don't share with their business connections the things that need to get done. This is the time we want all volunteer leaders to be leading, because that's a critical part of the need for leadership in a pandemic. Your board also needs to have a generative approach, and this is the last piece of this I want to share with you. Part of this leadership piece is thinking about how your board is structured and how it fits together. So you may know this, you may not. Most nonprofit boards begin their life cycles with mostly fiduciary boards. It's the nature of a board. If you're doing something complicated, it's not always possible that volunteer leaders will get it and know how it works and be ready and willing to do it. And so they tend to start with what they know, and your financials is something everybody can look at and know. And so a fiduciary board is a board that focuses more on the numbers, asking the question, Can we afford it? Do we have money? Is there funding? Is this the right thing to do? Are we going to end up on the front page of the paper? This is an important leadership quality in a board member, and it's also a legal requirement of a board member. So you want fiduciary board members. But if you have an entirely fiduciary board, then you're probably never going to innovate. You're probably never going to think outside of whatever box you build, and you'll have lots of buffers that'll keep you from being hurt, but it'll also keep you from doing something. The strategic board members, which is the second level of board members, strategic board members are people who like plans, or they like the theory of change. They like strategies, and they like dashboards and scorecards that help them see how well we're doing, how close are we to getting things done. The third kind of board member is a generative board member. These are the people who think and ask the really tough questions, like, what should we be worrying about? What keeps the CEO up awake at night? What keeps volunteer leaders awake at night? These leaders ask questions like, why are we doing this? Why are we doing this at all? It sounds like a good idea, but why are we doing it? They ask, are we the right people to be doing this thing? Or is there somebody in the community doing it better and we should cede this to them? In a perfect world, your board, your nonprofit board that's well defined, has all three of these skill sets around the table so that you're constantly testing the boundaries of all the areas of governance that you need to. But you also, by the way, don't want a fully generative board, or you might be building car washes on the south side of town to generate money for the programs you're providing on the north side of town. Generative board members tend to come up with big ideas, and they ask not why, but why not? And in many cases, they'll say, if not us, who? And if not now, when? So that's an important generative discussion point for governance, but not one you want to dominate your board. Also know that coming up right after the pandemic, the community is going to want more from all nonprofits. Across the country, dozens and dozens of jurisdictions and places are rethinking entire systems. So becoming the expert in cross-issue analysis and data is really important for nonprofits. Not just understanding their data, but understanding other data. And being able to explain how focusing of the work that they do impacts economic development, education, and at-risk populations. Those are the three need-based areas that philanthropy is driven by right now. And then the ability to collect data and analysis from other places, other people that have done it. One of the things that will pull communities around nonprofits and leadership is when they can identify, here are 10 cities where it was done better, and we've got their data, and we see how they did it. Thus, you've got a theory of change. Now, the last piece I want to share with you around this is the fact that becoming a frequent guest on influential stages is something all nonprofit leaders, whether they're volunteer leaders or staff leaders, need to do on a regular basis. When you're on other people's stages talking about the work you do, you'll tend to get their attention and get what you want from them. What all this really comes down to is thinking a little like a startup, right? It's really like thinking about a new entrepreneurial business. And there's a strategy called SCALE, which is deep in social entrepreneurialism. The drivers for SCALE are staffing, communications, alliance building, lobbying, earnings generation, replication, and stimulating market forces. That's where Scalers comes from. You should know that these elements for nonprofits are equally important as they are for entrepreneurial ventures, because at the end of the day, it's this mix of metrics that helps you get to where you want to get in the nonprofit sector. And it also helps you overcome the things you need to overcome. For instance, leaving out public policy and having no lobbying voice at all is not a good idea for any nonprofit, because if you're not, as the old saying goes in policy, if you're not at the table, you're on the table. And so there's no way that you can be a part of a discussion if you're not in it, in all of these spaces combined. Now, I promised you that there was some bad news, but it wasn't all depressing. And I'll just tell you that the future is bright if nonprofits are ready to lead. You think of this like a forest fire and respond to it that way. Forest fires burn away the underbrush, and they're terrible and tragic. But what grows out of them are better forests. Now's the time to build transformational models and business models at the systems level. So for nonprofits that operate in the depths of their level and don't think about the systems outcomes, this will be a big transition for them. It's not about building the final system. And as I said to you in the beginning, history really shows this opportunity as happening. So for the first time in history, in the history for some of us, for some of our lives, we need non-reversible paths forward in transformation. We don't have to design the whole system, but we need to move ahead quickly and with thought. So I've given you a lot to think about in a short period of time, and I would love to entertain some questions from you now to think about what you're thinking about it and what you might want to think about next. And so I think Marianne is going to monitor the chat box here and see if there are questions that I can answer for you.
At this point, we have no questions.
Okay, perfect. Then the answers are clear. We all need to just get to work, right?
There we are. Let's just run out and be innovative and scale things up.
I like it. I like it. Well, let me tell you what an honor it is to have the opportunity to speak here today. And I appreciate all of you for your field of study and the work that you're doing. And for all of you that work in the sector or are getting ready to go to work in the sector, thank you for the work that you do and the leadership you create around the communities you're in.
Well, since no one has a question, I will put one out, just sort of a general. So if you had to have one nugget of wisdom that you'd give the nonprofit sector in Central Florida, what would that be? What would you really want them to either take away from this, or what would you want them to really pay attention to?
Well, I think one of the things that is really important at this point in time for nonprofits in Central Florida is their transformation to more sophistication. Right? We have a sector here that is still relatively young in the way it operates and thinks. And by that, I don't mean, I'm not batting their intelligence. What I'm saying to you is that the community is not called on the sector to do bigger things. And so at some point, either the sector needs to do that or the community needs to call on them to do that. And that's what drives most of the things we talked about here. The second thing is just this question of equity and equality and how we deal with that. Central Florida is a very diverse place. And as I wander around, I'm always kind of confused at people who are proud of our diversity, because people will talk about our diversity like we somehow planned it, right? We didn't plan our diversity. Diversity happens to you. It's not something you do. Inclusion is something you do. And so the ability for us now to build better systems that are driven by people who know how to solve problems because they understand the problems, and not nonprofits that are doing things to other people. This is the time for us to really dig into that issue and change it. 77% of the nonprofit boards in Central Florida are predominantly white. And now is the time for people of color to take leadership positions around those boards. The Central Florida Foundation will be working on an initiative around that soon to identify ways to help Black and brown leaders find ways into those circles and prepare them to take those leadership roles. And I would say to everyone on this call, this is the point in time where we need to start thinking about a whole community and not thinking about an identity balanced community. We really need to work on making the community a whole and making certain that we're not leaving people out. That's my only bit of wisdom that I can share, Marianne.
Well, thank you. I think you really touched on all of the themes of this conference. Certainly that nonprofit leaders need to lead forward, acting on their values, doing that in a very decisive way. And the other part is certainly looking at the equity and inclusion that is so important as we look forward.